Dawie, just a minute ago off air, you were reminding me that at the beginning of this year, you said that on dollar rand we would be trading below 7 and on euro rand we would be trading below 9. Well, on euro rand we're very close to those levels. Looks as though we could pull back below that level today. And of course, on dollar rand, you're 100% correct.
Well, when I do get it right, I want everybody to know about it.
I'm sure you do. It's difficult to forecast
doesn't happen that often. Well, the reason was it's not a rand call. It wasn't a rand call we made. And by the way, we called the gold price at 1250. It's currently trading at say 1400 or so. So, and
you win some, you lose some.
Yeah. Well, in fact, it was not a bad call on gold because at that stage the gold price was around about 850 or so. But it wasn't really a call on the currency, on the rand. It was more of a call on the dollar and the euro. And what's been happening in the United States and in Europe, of course, obviously must be negative for their currencies. So that's the reason why my call at the beginning of this year was for the rand to strengthen. Not really a rand strengthening, more case of the dollar and the euro weakening. And I think we're probably going to see more of the same next year. I won't be surprised if we see the rand going even stronger, if we see the gold price going even higher. But the gold price is a bit of a wild card, a bit of a wild horse.
And the volatility that we're seeing
in
the gold price at the moment.
The gold price, you can't predict the gold price anymore. If you consider, or if you look at the gold price like you look at any other currency, you can just calculate the sort of numbers. But the gold price is all over the place. The point is whether it's going to go up or down.
If we see more trouble out of the Eurozone, just going back to when we first saw the news headlines out of Greece, gold at that point rallied to $1,424 an ounce, which was the new all-time high set. It then retraced its ground. It went all the way back to $1,340 an ounce. Again, we see the news headlines circulating around the Eurozone. Ireland hits the headlines. Where do we go? We hit a new all-time high, $1,430 an ounce. One thing, when you say it is difficult to read the gold price, for sure, but if we see further bad news out of the Eurozone, if Spain blows up, don't you think that it's a given we're going to see gold going through $1,600 an ounce?
I think it's probably going to happen, yes. I can't disagree with you, but I think there's another message in the gold price as well. And I think it's not necessarily what happens to the gold price, $30 or $50 up and down one day and the other. I think it's more of a question on what the direction of the gold price is. And I think the gold price is also telling us that gold bulls are getting worried about inflation, American inflation and European inflation. And in fact, that is what the bond market is telling us as well. Not that the Americans are concerned about this. In fact, they would like to see
deflation.
They want inflation. They want inflation most definitely. But I think what the gold price is certainly telling us is that, first of all, we aren't certain. We don't know what's going to happen. And secondly, we're getting concerned about what's going to happen to these two currencies, the euro and the dollar. And I think the gold bulls are telling us that there could be some inflation pressures around the corner.
Where do you see the rand going from here? If we've got the trouble that we continue to see out of the developed world, and certainly the dollar faltering, the euro faltering, pound is also under pressure, do you think that 550 is plausible, 2012?
Well, you know, theoretically, the rand's supposed to trade about 515 or 520 to the US dollar. That is on purchasing power parity. You know, I've done a bit of a calculation, I've played around a little bit.
Everybody was overvalued on the purchasing power
No, it's not.
Basis.
No, it's not. Well, depending what you look at, it really doesn't matter. The point is that the rand is probably still undervalued, but the important message of the important point is that the rand is relatively strong, and perhaps on a historic basis, the rand is at its strongest level since about 1980. So it is very strong based on historic patterns.
But you are saying that we should see it much stronger.
No, I'm not saying that. I think the correct level of the currency is probably around about 8 or 850 or maybe even 9. And the reason why I say so is because of our, the old story, our Achilles heel, and that's the current account deficit. The current account deficit currently about 3%. It's not a problem yet. We're probably going to see it around 3.5%, 4% at the end of this year. We're going to see it at 5, 6%. And soon we're going to see it at 7% to GDP, and that's totally unsustainable. So the current account deficit simply tells us that because of the currency and some other factors, that we consume far more than what we produce in South Africa, and the currency will eventually correct that misalignment. So the currency, my suspicion is the currency will remain fairly strong, and it's not a rand story, mostly a dollar story, for quite some time, perhaps for the next year or so. But the day, I promise you, the day will come when the currency is going to bomb out again.
And the quarterly bulletin that we saw out yesterday, of course, forecasts were for the current account deficit to come in at 3.2% of GDP. We came in at 3% of GDP. Shouldn't that traditionally have, because the prior print was at 2.5%, That is a risk for the rand going forward if we've got a wider current account deficit in relation to GDP.
Well, the rule of thumb is that your current account deficit should not exceed economic growth. Currently, economic growth around about 3%, the current account deficit around about 3%, so no problem. Anyway, we've received close to 100 billion rand of foreign investments coming into South Africa. So a current account of 3% deficit, I'm not concerned about that. But the problem with we South Africans, we get, as soon as the rand gets stronger, we start importing all those flat screen TVs and iPads and all those sort of things. And pretty soon you will see the current account deficit blowing up. We have seen
what are we
demand.
looking at as a blow up? 7% of
yeah,
GDP?
Well, that above GDP growth roughly is unsustainable. And if it goes to 4% or 5%, I won't be too concerned. But by the end of next year, it could go above that. And as soon as you see some uncertainty globally, then there's a possibility for the rand going a little bit weaker. What is clear also is that we don't see fireworks.
And the risk is that foreigners potentially will look to outflows and we can't finance our current account deficit.
As simple as that.
That's the thinking.
That is as simple as that. Foreigners invested nearly 100 billion rand in South Africa and they bought all our bonds and equities, and I think they will continue to do that. But just imagine if foreigners, instead of investing on the bond market, bought 100 billion rands worth of factories in South Africa. Just imagine what would have happened to the South African economy. So they like us, the money is there, they want to bring it to South Africa, but they want to invest something which they can sell quickly and run when the proverbial hits the fan.
Your thoughts on interest rates? What are we going to see come January? Because I see a number of economists forecasting now flat for the whole of 2011, first hike, first quarter 2012. Is
That's
that in line with
a
your
test.
thinking?
That's a real test for the Reserve Bank. It's very easy for a central bank when the cycle is down to cut interest rates, and I think the Reserve Bank has been more or less on the right side of the decision on interest rates. So that's easy. It was an easy call. The difficult call is going to be when they have to start tightening up. Now, if you go historically what the Reserve Bank has been doing, they are very quick to cut when interest rates or when inflation comes down, but they're very slow when interest rates, or rather when inflation starts going up, to increase interest rates. Now, the question is, what is our new governor going to do? My suspicion is she will probably try to keep rates as low as possible for as long as possible, but the day will come, and it's probably another year or so away. When inflation starts picking up again, when the Reserve Bank will have to start tightening a little bit.
How did you respond to the SARB governor's comments earlier this week, saying that we are not out of the woods on the international front? South Africa is, I'm now paraphrasing, but is not an island. We will be affected by continued bad news flow on the international front.
That's her job. She's the central banker. She's supposed to tell us those sort of things. Remember, she's not a politician. A politician is going to give you another story. And whenever a central banker says something, they usually refer to inflation, and that's what she has been doing recently, although inflation is not a problem in South Africa yet. Perhaps just something interesting that I've picked up. If you look at the manufacturing data in South Africa, coming in at, I think, 2.5%, and that's the real, and remember, that's a real increase in manufacturing production in South Africa. If you compare that to the nominal increase, the difference between those two is the inflation, or the implied inflation in manufacturing. That is currently standing at 4.2%. What I'm trying to say is, although normal inflation, normal consumer inflation, the way that we measure that, is currently just above 3%, we can see here and there our signs in the economy that inflation is slowly starting to pick up, and the time will come, and it's probably going to be in the next half of next year when we see a little bit more pressure on inflation, upward pressure on inflation, and then the Reserve Bank will have to start to act and increase interest rates. I don't expect much, but the possibility is always there.
China and the threat of interest rates still being hiked. We've already discussed that they've increased their capital reserve requirements. But Robin Barr, as I said to Andrew Kinsey earlier, saying we're not out of the woods. We may still see a hike on interest rates in China. And of course, we are so closely linked to that commodity story, to a buoyant Chinese economy making up for anemic growth in the rest of the world.
Well, the Chinese are very interesting. If you don't want people to start buying tomatoes, you can do one or two things. You can either increase the price of tomatoes, or you can simply limit the supply of tomatoes. Now, that's what the Chinese are doing. They're not increasing the price of tomatoes or interest rates. They're keeping interest rates unchanged at the moment, but they're limiting the supply of tomatoes or money. Now, the effect is supposed to be more or less the same, but because of the Chinese monetary system being under full control of the politicians, they can essentially reduce the supply of tomatoes and keep the price unchanged.